Hello everyone, welcome to Breakdown on EU. Before starting the breakdown, let me address a few things. Now, those of you that have stayed with me in CPI since the first level without taking a break or leaving in between the levels, those students will get to have one-on-one sessions with me at the end of CPI, right? I've told you this before. Now, what I'll do is that I'll schedule these sessions somewhere next year, and will make sure that every single deserving student get to have these sessions, right? Because from the beginning, my goal and objective in CPI has been to get all of you independence in trading when it comes to technical knowledge or knowledge related to the psychological aspects of trading, right? Or simply knowledge about the integration of these concepts, how to frame entries, how to determine drawn liquidity, and how to build narrative, right? My goal is to teach you all of these things and then make sure that you aren't left with anything behind, right? That is my goal. Now, that being said, the last one-on-one sessions that I'd offer the deserving student, right, that have stayed with me throughout the whole course, that would be your last step to reach independence, right, when it comes to technical knowledge. And what you can do is you can share your problems with me and your concerns in those sessions, and I'll make sure to get back to you with potential solution and or advices, right, from my personal experiences. And that is going to be the reward for the student that has stayed with me since the first level and that stay throughout the whole coaching program, right? After all, this is a coaching program, not a course, remember that. And your studies and hard work will pay off, and I assure you and guarantee you that. Another thing I want to address is that the weekly chapters that I release are the most well structured and organized detailed videos, right, you will ever find on these topics and concepts. I make sure to address and discuss every single detail and intricacy of the particular topic that the chapter is about, right? I don't left anything behind. I share all the knowledge that I know of and that I'm aware of, and I don't held hold back myself to share that with you, right? And you know that, and you can probably guess that from the way I speak and from the way how I conduct myself, right? These were the things that I had to address. And now let's get back to the breakdown and let's start off with the weekly time frame. So from the previous breakdowns, you'd know that my target for this week was this weekly candle range low right here. We formed this CRT here after we purged the swing high and this CRT high, and we formed the previous month's high right here. And now this week, my initial expectations were to expect bearish price action toward this short-term drawn liquidity before we could expect further higher prices or any other major significant move. I determined my short-term drawn liquidity to be this weekly candle range low for this particular week right here, right? For this particular weekly range expansion. This is how I determine my drawn liquidity. I determine my short-term drawn liquidity to be this weekly CRT low, right? Now let's go down to the daily time frame and see what we got there. On the daily time frame, the thought process was the same, right? Swing high taken, and now price has to retrace lower to take out short-term drawn liquidity before making another expansion or any other major move, right? My directional buys on the daily time frame was to anticipate price to take out the weekly CRT low, and you can see that we took that out on Tuesday with this daily candle right here. And along with that, what we also did is we also tested this order block right here. Now today and Tuesday, I anticipated and expected higher prices because we took out a major swing low in the form of this weekly CRT low, and along with that, we tested a key level in the form of this order block, right? And for those reasons and for those factors, I anticipated price to form bullish price action on Wednesday, right? I determined my directional bias to be bullish, right? Now the objective on the higher time frame has now been met. Now let's go down to the 4-hour time frame to see how I positioned myself on the lower time frame and framed an entry around the 4-hour CRT. On the 4-hour, you can see that what happened is that yesterday we came down lower to take out the weekly CRT low with this particular candle, right? And along with that, it also tested the order block, the daily order block. Now, if you've seen my content and post about candle ranges or CRT, then you'd know that the best CRT and candle ranges are formed at rejection of highs and lows, right? And you can see that now that price has rejected below this low with this particular candle, right? And it also tested the order block at the key level. This candle could be treated as a CRT once it's purged, right? Now the thing is that I couldn't take an entry right here at this CRT because it wasn't purged at a key time. And another thing is that we were nearing the daily's close, and I usually stay out of price at that time. I don't frame entries or take entries or execute any trades at that time, right? That's why I couldn't trade this CRT. I didn't had conviction when it was purged first, right? Now, but the main reason I told you about the CRT, even though I didn't trade it, is that like maybe we couldn't trade it, but we can still use it as a drawn liquidity for Wednesday's candle or Wednesday's price action, right? What you can see is the Wednesday candle open right here, and from here I wanted to see higher prices and at least the CRT high, because you know that the CRT can not only be used to position yourself or to frame entries, but also you can use candle ranges or CRT as a drawn liquidity. And during Wednesday I built this narrative and I wanted to see higher prices during London Open to take out this CRT high. Now during Asian session we formed this ranging candle right here during 9 p.m. And what I expected during London Open is that I expected this 9 p.m. candle low to be purged as a CRT and this rejection block to be tested. And then from there I wanted to frame an entry on the lower time frame, right? And you can see that that's exactly what happened. Price purged the candle, came down lower to test the rejection block as a key level, and after that it expanded higher, right? Now let's go down to the 15-minute time frame to see how I framed an entry there. On the 15-minute time frame, you can see the opening and closing times for the Wednesday, right? For Wednesday. And you can see that during Asian session, we formed a ranging profile in this range right here. And also along with that, we also formed the 9 p.m. micro CRT within the macro CRT on the 4-hour time frame. We then purged the CRT, came down lower to form this low right here after testing the 4-hour rejection block, right? Just like I expected and anticipated. And after that happened, I waited for a model 1 order block entry to be formed so that I could take an entry, right? And it formed right here after closing above this candle. What I did is I took an entry at the order block high with stop loss below the order block, and I targeted the initial CRT high, the micro CRT high, and I targeted at least 3R risk to reward ratio, right? What happened is that the 3 risk to reward ratio reached right here, so I closed my entry there. That was the whole trade breakdown.